Jordan Toy from Legacy Family Wealth joins us now for a look into the day's trading session. Jordan, thanks so much for your time today. So let's start off with what's playing out in the U.S. The Fed, of course, cutting rates overnight, a 25 basis point cut. What did you make of that move, considering that the committee was divided and many economists are calling this a hawkish rate cut?
So you stole the words straight out of my mouth there. I was going to refer to the hawkish cut as well, which I think largely speaks to the nature that we expected the rate to be cut at that meeting, but there was an expectation as well that there was going to be either some dissent or potentially in the press conference that we'd have sort of a bit more hawkish commentary out of the chairman, and we certainly got that. So we had a 9-3 split, which in terms of dissenting votes, the 3 that we did have, is the most we've had since 2019. And Jerome Powell talked quite a lot about this in the press conference, and I think it speaks to sort of a healthy dynamic in that committee, right? It can't be a situation where we have groupthink and everyone in that committee is thinking in the same way. And I thought it was quite interesting that we had one dissent on the downside. So we had Governor Stephen Miram, who's sort of a noted dove, wanting a larger rate cut. And then we had 2 dissents on the other end, where we had 2 hawks or hawkish moves, where they preferred no cut out of 2 of the voting members. So we also had a number of soft dissents from other committee members, but there's a pretty wide range of views in the committee, and I think they talked to that quite a lot. Just briefly wrapping it up, we also had a new dot plot out, which largely spoke to what the rate path looks like for next year and 2027. And it's looking like, there's quite a staggered amount in terms of where the dots sit, but the median is looking like 1 rate cut in 2026 and another 1 in 2027. And then we had a bit of a GDP growth forecast upgrade from them as well, from 1.8 to 2.3%. So quite an interesting one, definitely differing views on the committee. That was pretty clear. And we'll have to see where rates move from here. But if you look at the dot plot, there's quite a lot of very similar dots in different places. So it'll be interesting to see how 2026 unfolds.
Yeah, really interesting watch last night. And what will be even more interesting is to see what happens when we get that new Fed chair sometime next year. Let's move over to what's been playing out here at home. Mining and manufacturing numbers out, showing a bit of a strong start to Q4. Mining up 5.8% in October, while manufacturing not showing a strong showing there, but still eking out some growth, up 0.2%. Does this give you confidence in terms of Q4 growth, Jordan? We even saw retail sales number quite strong yesterday.
I think so. And we want to just see, and I think we've talked about it before, it's sort of one data point doesn't make the whole story, but we start adding up these positive wins, and one small positive win after another really starts getting that momentum going. And I mean, just to reiterate, we talk about the credit ratings upgrade we had, removal of grey listing. So you have these, accumulation of small wins that starts moving us more and more in the right direction. And I think as that momentum builds, we have foreign investors start to take notice. So one thing that is still quite important, I think, especially for sort of the manufacturing, mining sectors, is gross fixed capital formation. So basically infrastructure spending essentially is what's needed. Mining specifically, just to touch on that, we know that there are some issues. I mean, there was news out of Eskom sort of around the electricity pricing and how it's impacting on our smelters, specifically companies like Glencore, Samancor, battling to keep their smelters open with where electricity prices are. Hopefully that has now resolved itself. I'm still waiting to see more detail on that from Eskom, but it seems like there's been an agreement reached there. The hope is that money has to ultimately come from somewhere. So hopefully it's not leading to a bigger increase on the average person's electricity prices, but it's an important industry, right? Mining and manufacturing are important for our economy. So, we can't have all of these smelters closing and the associated job losses, and the knock-on impacts from consumption, etc., will be amplified there. So another move, I think, slowly in the right direction. We need to keep building that momentum as we go.
All right. And just quickly before I get into your stock pick, Mr. Price's share price, Jordan, still bleeding. It seems like markets, investors don't like that plan to get into the European market. Why the negative sentiment? What's going on there?
So obviously a big share price move yesterday and a reasonably large share price move again today. I think it's down about 3 and a bit % when I last looked. So I think the key thing here is the market is clearly taking the view that, or investors believe that I think that the company is potentially overpaying here. Management clearly has a lot more information in terms of, or insight into NKD and the business that they're actually buying, and clearly have quite a lot of confidence in it, because just looking at sort of some napkin math here, you have Mr. Price trading at around about a 13 there and thereabouts PE, and they're paying around 9.7 billion for 260 million rand in earnings. So you can back out a PE sort of around north of 30 out of that. So, you know, it's quite a big check for Mr. Price to write, with their current market cap at about 50 billion, and they're writing near 10 on the upper end at around 10 billion rand. So there's a risk of dilution, and it's quite a big move for a company of Mr. Price's size. As I said, management clearly has quite a lot of confidence in it. The market, I think, the market's seen the story before, right? So
yes.
we know that from what they've described, that the business model fits quite well with Mr. Price. You know, it's a value retailer, but I think the price tag is scaring the market a little bit. Mr. Price, as I said, is paying that big premium for a European asset when, you know, their own stock is relatively cheap. And to sum it up, I think investors have seen this movie before with, you know, the likes of Woolworths, Truworths.
Yeah.
As South African investors, we've seen quite a lot of these European expansions not work. And I think the market's clearly nervous about this sort of being another similar situation, and I think that's why the stock is moving down.
Yeah,
well,
and it always seems like South African retailers have a tough time in either Europe or Australia. But we're not going to get into that any further. Let's get into your stock pick. We have about 30 seconds.
Okay, very briefly, I wanted to touch on Netflix, mostly because there's quite a lot of news going on at the moment with the Warner Brothers transaction. You know, you've got Paramount on the other end trying to buy that business. I think what's interesting is Netflix has committed themselves to this deal. Warner has committed as well from their side that they've recommended that deal. The concerns, I think, are more around competition. So, I mean, President Trump came out pretty quickly and said, look, it's a big market. It has a big market share, and this could be a problem. And Netflix is committed to a $5.8 billion breakup fee if this deal doesn't go through. So, I mean, we can't forget that President Trump is very close with Larry Ellison, who's the second richest person in the world, and obviously one of the founders of Oracle, and he's the father of the CEO of Paramount. So, you know, it's not just Larry Ellison as well. We've also got Jared Kushner, who's President Trump's son-in-law, whose private equity firm is also part of this deal. So, you know, it's hard to say when it comes to politics whether President Trump would sort of apply some pressure to this deal, but you know, you look at some of these factors and go, we know he's sort of made moves in the political space where he's not afraid to wield the political power he has. So Netflix must have quite a lot of confidence that this deal will get across the line for them to commit to that breakup fee, considering all of those other factors. Sorry, that's well over 30 seconds, but try to keep it brief for you.
Don't worry about it. It's okay. Thank you so much for your time and taking us through trade this evening, Jordan. Now, that was Jordan Toy from Legacy Family Wealth.